In continuation with income method of measuring national income, we are doing the second one, income method, that is, and we were doing what is known as compensation of employees. And compensation of employees consists of two parts. One is what is known as wages and salaries in cash and in kind, and the other one is employers' contribution to social security schemes. So we finished the cash part. We finished cash, and we were doing. So this is in continuation. So wages and salaries in cash. Let's do the kind one. Cash means wages and salaries in cash would mean what? Again, I'm going to repeat. That is, um, they include daily, weekly, or monthly payments in cash. So even if you're getting allowances as house rent in cash or conveyance allowance in cash, etc. So that is all in cash. Now talking about what is known as wages and salaries in kind. So what are the wages and salaries in kind? So these are include goods and services produced by the employers to employees for satisfaction of wants of the employees and their families. So what are some examples? Like, for example, rent-free accommodation, transportation to and from work, imputed interest of interest-free loans, then vehicles for personal use, recreation or holidaying facilities, medical expenses, etc. Now, we're going to come with what are the social security schemes. So talking about the social security schemes, so these are, as you can see, these are also part of compensation of employees. So they include contribution of employers towards social security schemes like casualty insurance, life insurance, provident fund, gratuity and pension provisions, or any other schemes which benefits employees. And why is not the other part, that means employees part, considered? Because that's already been given, that's already been counted. So that is why it's not added up there. So now we come to step 3, which is now we're going to talk about operating surplus. So what is operating surplus? It consists of rent and royalty, interest and profit. So what is rent? You can define it as the amount payable in cash or in kind by the tenant to the landlord for the use of land for production. The meaning is specific to national income accounting. For the tenant, payment of rent is a factor payment. Payments for the use of a structure on land, machines, etc. is not factor payment. Similar, rent is royalty. Royalty is defined as the amount payable to the landlord for granting the leasing rights of the subsoil assets only. And it can also be for the book that you've written or for the song that you've recorded. So all of that. Now interest, what is interest? Now people borrow money and pay interest in return for using the money. Borrowing is for two purposes: for making investment in business and for meeting consumption expenditure. So production units borrow for meeting investment expenditure, and consumers borrow to meet consumption expenditure. Both have to pay interest. In national income accounting, interest as a factor payment is restricted to payment by production units only. Interest paid by consumers is not a factor payment, it is a non-factor payment. A factor payment is a payment made to factor of production. This amount lent assumes the role of a factor of production, capital, only when borrowed by a production unit. As such, interest payment only against borrowing for business purpose is treated as a factor payment. So, in national income accounting, interest as a factor payment is defined as the amount payable by a production unit for the use of money, whether borrowed or provided by the owners. If the money is provided by the owner himself, interest becomes payable to him. It is called imputed interest. Now, This is estimated on the basis of actual interest paid by actual borrowings by other production units. So interest as a factor payment includes both actual as well as imputed interest, which is interesting. Now profit. Profit as a factor payment is the amount payable to the owner of the production unit for his entrepreneurial abilities. The owner undertakes production activity with the expectation of earning profit. The production unit uses profit for payment of A or 1 corporate income tax and dividend, and the remainder is called undistributed profit or retained earnings. Therefore, we see that it is the sum of corporate tax, dividend, and undistributed profits or retained earnings that make up profit. Well, so now we another in step 4 we are going to calculate, which is very important here, at least in India, is the mixed income of the self-employed, which is very important. So this category is needed because from certain entries relating to factor payments in business accounts, it is possible to know whether it is not, sometimes you really cannot find out whether it's profit or rent or interest and profit. Sometimes one item consists of more than one type of factor payment. The convention is to record such factor payments as mixed income. So let's take an example or an illustration. So take the case of a self-employed doctor. Suppose the doctor runs a clinic in his own building. So he has invested funds on machines and equipments in the clinic. In this situation, the doctor is performing the role of all the 4 factors of production necessary to run a clinic. When he treats the patient, he is a worker. He is also the owner of land on which the clinic is constructed. He is the owner of capital because he has supplied funds to the clinic. He is also the entrepreneur because he has taken initiative in starting the clinic. So this is how we can say. So now suppose the doctor charges a consultation fee of say ₹100 from a patient. Now how will the doctor record the entry in his accounts? Normally he would record his entire sum of ₹100 as profit, assuming that there is no depreciation and net indirect tax. But in reality, this is not profit alone. A part of it is his remuneration as a worker, another part is rent of land on which the clinic is situated, still another part is interest on funds invested by him. The remaining part is his profit as an entrepreneur. As such, the consultation fee of ₹100 should be divided into 4 parts, that is, into 4 factor incomes. But the estimators of national income have no statistical device for doing so. This leaves no option before the estimators but to record this income as mixed income of the self-employed. So sometimes instead of mixed income, it is called so that's what we said, mixed income of the self-employed, because mixed income arises mostly in cases of unincorporated enterprises comprising sole proprietorship, small partnerships. In most of these enterprises, the owners also assume the role of workers, the financiers, the landlords. As such, producers are classified as self-employed. This is why the term mixed income of the self-employed is used in India. And a big proportion of production activity, more than 50%, is carried on in the unincorporated enterprises. Mixed income is very significant as a proportion of the total domestic factor income. So this is what we've done. So if you add, so when we add up all this, now this is step 4, and in step 5, when you add up all this, what you get is net domestic product at factor cost, And to this, if you act like, for example, just see the step 5, as I said. So to this, so when you add up all this, what do you add? Compensation of employees plus operating surplus plus mixed income of the self-employed. If you add up this, what you get, the aggregate that you get is NDPFC, that is domestic income. So when you get the domestic income, to it you will add net factor income from abroad, and that's how you get national income. So we'll, in the next class, I just want to talk a little bit more about mixed income of the self-employed.